Welcome to This Week in Money. I'm Jim Goddard. Today, CIBC Wood Gundy's Ross Clark says it was all trick, no treat for precious metals. Inc. Research CEO Ted Dixon is hopeful Trudeau's financial plan will work. Public Banking Institute founder Ellen Brown on how Canada and the U.S. could instantly erase their debts. We'll talk to Ross Clark right after this.
I'm Larry Ray, President and CEO of American Manganese, Inc., listed on the TSX Venture, ticker symbol AMY, A-M-Y, with proprietary patents in the U.S., China, and South Africa. Our focus is on recycling lithium-ion batteries for electric vehicles. China recently legislated the responsibility for recycling onto their electric vehicle manufacturers and importers. For more information, please visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Welcome to This Week in Money, the source for market opinions. Here is Jim Goddard.
My guest is Ross Clark, investment advisor at CIBC Wood Gundy in Vancouver. Welcome back to This Week in Money, Ross.
Nice to be with you, Jim.
Well, a real Halloween scare for people who dipped into the precious metals market this week.
It really was. I mean, things were looking great up until the middle of the day on Wednesday. Silver had managed to put on a new high for the week, actually dating back probably a couple of months. Gold market was strong. And then the FOMC minutes came out, and it was apparent that the Fed might be looking to raise rates later this year in December. That took the wind out of it, so the trick or treat, everything went south from there. Now, we had offered a report last week regarding the silver and gold market, in which we were talking about how dangerous the commitment of traders numbers were. Very, very large short positions by the commercials and long positions by the speculative accounts. And even as of this week, the numbers that came out as of Friday once again show that the speculative longs in gold are up another 3,000. Commercials are another 3,000 short. In silver, they're up almost 10% in terms of the long positions from the non-commercial speculators. So at the end of the week, as things started to come unglued, I think we've started to run a few stops underneath this market. And typically, when we've had commitment of traders numbers as high as these ones are, it will take 3 to 5 weeks before the market is capable of finding a bottom.
Is there any area that had any brightness or some optimism?
Well, the optimism was over in these big cap names over in the equity markets in the States. If we take a look at it, the NASDAQ is basically back to its all-time high as of now. I mean, for all that we had a break in August and a retest of the low in early October, October has turned into being probably from what I can see, the best month in 4 years. So it was led, and we talk about sector rotation happening out there in the marketplace. You know, in the spring it was healthcare and biotechs, and right now it's the big name tech stocks. It's your Facebooks, your Amazons, your Googles, Microsofts, all those big cap names that are leading and making the indices look really, really strong. But when one takes and most of those indices that you hear about are capitalization weighted, so that the biggest names really have a high weight to the value of the index. But if you look at the equal weighted versions of those, they've only recovered about maybe 50 or 55, 60% of the losses that we had into that August-October break, whereas the capitalization ones are probably recovered, depending upon the index, anywhere between 85 and 90% of the losses. So the breadth of the rally isn't as good as it looks, and some of the measurements that we do, when I put this out in the piece in the report last week, when you take a look at rallies coming off hard sell-offs like we did in August, when you get that nice double bottom, and we've got 5 previous examples like this, the second leg off the bottom, you've got that first rally off of the October bottom, that had a pause, and now we've had this second leg. The second leg usually is about 80% of what the first one is, and in terms of the Dow, we've all but reached that target as of this week. So we're looking for a correction that might give back 40 to 50% of the October rally, and ideally the 50-day moving average will be the target that we can look for.
Ross, don't overdo the pumpkin pie.
We'll make sure that the kids get all the candy and that it stays away from me.
My guest has been Ross Clark, investment advisor at CIBC Wood Gundy in Vancouver. Coming up next, Ted Dixon on This Week in Money.
Always consult your investment professional before making any investment decision. This Week in Money is archived online at talkdigitalnetwork.com.
My guest is Ted Dixon, CEO of Inc. Research. Inc. spelled I-N-K. It stands for Insider News and Knowledge. It was Canada's first online financial news and research service. Welcome to the show, Ted.
Well, it's great to be back, Jim.
People are still wondering what kind of impact Justin Trudeau will have as Prime Minister on the business community. Do you have any outlook on that?
Well, we'll have to see who makes up his cabinet and what their first priorities are, but certainly the policy that he's put forward in terms of building infrastructure and rejigging the tax code would be supportive of growth on balance, and we'll have to see, of course, the details. But the idea of going to the bond market, where you have a global bond investor, is basically begging governments to take their money and using the bond market to fund infrastructure that is needed, as opposed to, sort of, hopefully it won't end up being into some sort of, grand fountains and the like, but needed infrastructure. It makes a lot of sense. And these really would be investments, if that's what he's talking about. So it should be a net positive for Canadian growth, and probably in terms of common sense, it would be a good move. So we'll have to see, but in general, it's certainly something that others around the world are also taking note of. Larry Summers was right off the mark after the Trudeau victory, saying that the Canadian election was notable for the fact that it was a party that promised to build infrastructure that won compared to the incumbents, which were more focused on balancing the budget. So that's positive. Jim, the other thing I'd like to say, we pointed this out on our blog on CanadianInsider.com, which is a free website that people can go to get financial quotes and insider filing information. In our blog, we point out that the Bank of International Settlements in Zurich, has been for years pleading with governments not to use monetary policy to try and stimulate the economy, but to use fiscal policy, because you can only push monetary policies so far before you start distorting the economy and distorting markets. And Justin Trudeau's platform is one of the first in the industrialized world, I would argue, that has basically done what is proposing to do what the Bank of International Settlements has basically been begging countries to do. So I think Canada is actually going to be watched very closely, and initially, there's a lot of goodwill, I think, towards this idea, and foreign investors will likely support the government's initiative, provided, of course, that it's administered properly and that it's not, it doesn't turn out to be a bunch of boondoggles, that there is a serious mechanism in place to make these investment decisions. So, it's early days. Well, the proof will be in the pudding, but I think the outlook for the Canadian economy is based off of these policies. It's positive. So I think it's something that we can be upbeat about going into the next 2 years. And I should add the other aspect of the platform in terms of rejigging the tax code. While it will hurt those at the higher end by increasing rates, so that will have a negative impact on those sectors of the economy that service that group, such as wealth managers, for example. The consumer sector, the consumer lending, the Canadian Tires, the Dollarama's, those kind of companies, they could end up benefiting as these tax rates are cut to the lower and middle income groups that are more likely to spend it. Now, we're not talking about a bonanza or a spending boom, but on balance, there's some evidence to suggest that if you cut taxes in the middle and lower brackets, those groups are likely to spend it more. So it could give some consumer companies in Canada, a bit of a boost. But again, at the expense maybe of some of the companies that would service the higher end.
Some have suggested many of Trudeau's promises could be funded by legal marijuana. How realistic is that?
Well, we'll have to see again. I mean, this is a tricky one. How is he going to structure that industry? And we'll have to see. One would suspect that governments by nature, if they see an opportunity to get some revenue, they will do that. So I have to suspect that they will be looking at a structure that would maximize the government's participation in that industry in terms of the revenue side in any event.
Plus, they couldn't charge too much, or the so-called private industry that's involved in pot would just undercut their prices.
Right. I think we've seen that on the cigarette side. For years and years, governments pushed as far as they could in terms of taxing that, and at some point, you tax it too much, and then you get all sorts of alternative suppliers coming to the market, and so they'll have to be mindful of that. And I'm sure they will be, but we're probably a few years away from that rolling out. So at this point, I don't think it's something they can take to the bank, but I'm sure they have their eye on it.
Ted, were there any horror show predictions if the NDP came to government? I mean, I remember Mulcair saying he would up the industrial tax from 17% to 19%. But when they dropped that tax, over 300 companies moved their head offices to Canada. Would we have seen those companies flee?
Well, the problem with the NDP platform was it was a tax and spend platform. I've heard the Trudeau platform being characterized as that, but really the Trudeau platform was more of a spend platform. But the NDP were tax and spend, so it didn't really have a payoff for anyone, except that if you're on the receiving of the spending end, and they weren't really able to articulate exactly who that would benefit, aside from maybe some child care spaces. But I think their message got lost, and the tax and spend risk. I think Canadians realized that they probably had to go back to the drawing board and come up with something a little bit more appealing next time around.
Could it have been something too like the BC election? I heard from friends of mine who were thinking about voting NDP, and then they said, "My God, what would that do to the business climate here?" And they ended up voting for the Liberal government. Right.
So, well, I think that was an issue that the Canadian economy won't have to deal with. But if you're going to spend and you're going to raise taxes, then you're going to have to be able to defend it and articulate your vision. The last time I was on your show, I think it was right when the election was called, and suggested the party that provided the clearest vision of where they wanted to take the country would probably win. And I think by the end of the campaign, whether you agreed with him or not, it was Justin Trudeau who at least articulated what he wanted to do best. I know the Conservatives, they were running on a balanced budget, and they were running on a vision of keeping the books balanced. But in terms of catching the attention and the excitement of the electorate, I just don't think that, well, obviously didn't cut it. The Conservatives next time will have to probably come up with something a little bit more ambitious in terms of where they want to take the country, whether it's, how we're going to increase the standard of living. And they'll have a few years to work on that, obviously. But the Liberal platform really, amazingly, was the one that kind of stood out. And if you'd asked me, at the beginning of the campaign, which would I put my money on, it wouldn't have been them. That's why I suggested we have to see which party can articulate a vision, if any of them could. And I was actually betting that none of them could, but the Liberals did manage to at least kind of put a few key themes together, and it seemed to gain some traction. And at the end of the day, I think Justin Trudeau, he was able to score on some common sense points, such as investing in infrastructure when interest rates are low. I think people understood that. And when you're trying to get people's attention everyone's got busy lives to lead, and they got to make a decision with the ballot box. I think that was something that people intuitively understood, that with interest rates are low now, why not invest in bridges and roads and tunnels now? While the investment climate is there and financing costs are cheap.
We're speaking to Inc. Research CEO Ted Dixon. Well, right here in BC, a major highway going out to Maple Ridge, they had to close the bridge because it was falling apart. Montreal has had overpasses collapse. Other cities have seen major buildings being propped up with beams and pieces of steel because they're falling apart. Look at 24 Sussex Drive, the Prime Minister's home. It's falling apart. There's a lot of pieces of Canada that need to be fixed up right now.
Well, absolutely. And same as our trading partners, including the United States. So we have this opportunity to actually leapfrog the United States in terms of our infrastructure. And so, I think it's it was a very intuitive approach for the incoming government now to take. And, why wait? And I think you have to ask yourself, if you're not going to make those investments now, what is the purpose of not making them? And to sort of say we're just going to balance the budget, that's fine. But the truth of the matter is that the balanced budget that was reported, you could look at the accounting behind it, and I'm sure there are many ways of adopting accounting rules, and there are a number of ways of looking at the current balanced budget that would suggest that maybe the risks surrounding that surplus are quite high. So I wouldn't be too concerned about the fact that we're might go into a $10 billion deficit. I know there are a lot of your listeners will be concerned that the Liberal government will continue to build deficits over time, and this is just the tip of the iceberg, and we'll have to see. That is a genuine fear. And if the new government gets addicted to deficit spending and doesn't hold to its promise to work back towards a surplus, then we're talking another story. But they don't appear to be targeting the money for program spending. It does appear to be primarily targeted towards infrastructure spending, and those would be one-time investments. So, but we'll have to see how it evolves. But at this point, all we can go on is what they've indicated they're going to do. And the other positive growth aspect of the Liberal platform will be the refugee policy. 25,000 refugees will be a good shot in the arm for the Canadian economy over the years. I mean, it does impact our population growth, by less than 1%, for sure. But the fact of the matter is that immigration has been a real benefit to Canada, as I'm sure all your listeners are well aware, and that by encouraging more immigration to Canada in terms of the economics of it behind it is a positive story. So that should also help the Canadian growth story along. It may take a few years to play out, but that's another positive growth element. So really, what I see from the new government coming in, there's three positive aspects on growth. None of them are astronomical by any stretch of the imagination. It's not like it's going to lead to a boom, but you've got infrastructure spending, you've got a rejigging of the tax code that should be on balance, and that positive, and you've got a stronger commitment to immigration, which should also be positive. So, I think there's a lot to look forward to in terms of the economic potential of new policies. And now, we'll have to wait and see what happens on the climate change front. There's always, that's a big question mark. Let's just hope that whatever initiatives are taken there, that they're responsible and do not take away significantly from the positive aspects of their platform. That would be a big, that's something to watch for sure. And there's a climate change conference coming up in Paris shortly. We'll have to see what kind of commitments are made there. If they distort energy prices and if they inflict higher energy costs on Canadian firms, well, that would be a negative. So we don't know what's going to happen there yet. So all I can comment on this point is what I'm aware of, and those three areas of infrastructure spending, tax reform, and immigration are positive.
What about the creation of a so-called green bank to help people who have innovative industries that would look at alternative energy? Because there is a worldwide pledge to phase out fossil fuels, that it's an old technology, it's time to look at green, so why not encourage those businesses? I always wondered about Alberta. How come you don't make plastic for 3D printing?
Well, any structure that involves the private sector would be good, because I think you need to have private sector input to determine the investments. I don't think there's a magic formula that works. Maybe some of your listeners are aware of some models in other countries that have been successful. I think there's still a lot of work to be done on finding the right formula for that. But there's nothing to say we can't do a made in Canada solution. So let's give it a try. But certainly anything that would involve the private sector, any market-based type of pricing would be preferred compared to bureaucratic planning. That's for sure.
Well, so long Canadians have been the haulers of water, the hewers, wood, just natural resources. Isn't it time maybe that we changed our attitude?
Well, I think Canada probably gets a bit of a bad rap on that front. We do have a very strong manufacturing aerospace industry. Despite the challenges you see in Bombardier, the fact that they're trying so hard to get the C series up and going, I would applaud that. I think that whether they succeed or not, let's hope they do. I think it'd be good for the country. But in general, I think there is a lot of entrepreneurs in Canada that work very hard. They don't get the attention. Now, that being said, we don't seem to ever get up to global brand status. The last run we had really was BlackBerry. So hopefully over time, if the Canadian dollar doesn't totally collapse here, and we're able to sort of keep our talent at home and be able to attract more money into the country to help build our businesses instead of selling them out, we'll make some progress. But we do have some leaders, global leaders like Alimentation Couche-Tard, which is in the Canadian Insider Index. It's a global leader in convenience store operations, and that doesn't sound very glamorous, but when you think about it, it touches a lot of people, millions of people every day. This store, this group, they service millions of people around the world every day. So it doesn't have the same profile as a Walmart. Certainly Home Depot or some of the American-listed companies. But there are some success stories in Canada, and I think you're going to see more and more of them, provided we don't make any major policy errors along the way, and provided, I think we've got to maintain a decent level in the Canadian dollar. Otherwise, all these companies will just get bought out and they'll be gone.
Well, I think one thing that might be good for Canada, too, is bottled water sales are about to surpass soda pop sales. First time that's ever happened. And we have lots of water.
Well, that's a question, of course, that tripped up the NDP leader during the campaign. So, that's not a huge value-added industry. What we're seeing in the public market in Canada is there are a number of design-oriented companies like Exco Technologies. It's another company in Canadian Insider Index. That have gone out and built different component businesses for the automobile industry. You've got a lot of really design-focused companies that are trying to sort of get larger scale, just through organic growth, and are being relatively successful. So, so long as we continue to so long as we continue to go with where our expertise are, and that would be our highly educated workforces across Canada. We focus on design and the ability to add value with our talent here in this country. Then, I think you will see a continued diversification of the economy. But, that will take some time, and and again, it's why I'm so concerned about the attempts of any central bank to talk down the Canadian dollar in order to support non-value-added human capital intense industries, because if an industry is dependent on human capital, then the value of the Canadian dollar, if it goes lower, is not going to help that industry. If anything, it could work against it. So, I just hope that we've seen, we've seen the peak in central bank intervention in Canada for the time being. When I mean intervention, I mean verbal. No, they haven't been in selling the currency, but they've certainly been trying to talk it down through their central bank speak. And we don't need their intervention. If they just let the currency find its own way, we'll all be fine. But we'll see. We'll see what happens with the new finance minister. If the finance minister of the new government believes in devaluing our way to prosperity, well then, we can talk about that another day. We'll have to see. But hopefully they'll leave the currency alone and just let it find its own level.
So right now, until we find out who's actually in the government and running things, it's pretty hard to make a prediction.
I think so, but I think once we see who the new finance minister is, and we won't have long to wait till it'll be announced next week. We should begin to get a sense of how the Bank of Canada is going to be expected to perform, and also the type of philosophy the government will have with respect to regulation and the like. So we'll have to see. The last few years of the previous government weren't as pro-market, I think, as advertised. When you look at how the restaurant brands, the Burger King, Tim Hortons merger was handled. I mean, basically you had the industry minister of the previous government rewriting the business plan of that company, so that wasn't very pro-market. You had Bill C-28, which basically regulated every commercial email in this country, gave the CRTC powers to regulate commercial electronic communications. The bureaucracy was seemingly reasserting itself under the previous government, and we'll have to see whether that gets stopped, whether it continues, but we'll see who the new ministers are and what their attitudes are towards the private sector and government regulation.
Ted, how can people find out more about Inc. Research?
Well, you can follow us at CanadianInsider.com, where we run regular blogs about public affairs but also mining and insider sentiment. And you can get free stock quotes on that site, live stock quotes from Kayax, and you can follow the Canadian Insider Index live during the day, which is a mid-cap oriented index of Canadian listed companies preferred by insiders.
Ted, thanks a lot for chatting with us.
Thanks for having me back, Jim.
My guest has been Ted Dixon, CEO of INK Research. Coming up next, Ellen Brown on This Week in Money.
This Week in Money is archived online at TalkDigitalNetwork.com.
12 books. She's an attorney, but not practicing law right now, but you still have all that legal training behind you, Ellen. Ellen, welcome very much to This Week in Money.
Thanks.
Ellen, you were saying there's a possible solution for President Obama to walk away from the White House hero. Some people say that's nearly impossible to do, but what's your solution for the president?
Yeah, he would have a fair amount of baggage to overcome. But anyway, so right now we have another debt ceiling crisis, which it's the third in the last 4 years. And the solution, I would suggest as a solution, that the government should just issue the money, which is what most people think governments do. I mean, most people think that our money is created by the government. It's not. Virtually all of our money is created by banks when they make loans. So that power was usurped, and that was a constitutional power. The Constitution says Congress shall have the power to create money and coin money and regulate the value thereof. So they can basically stamp coins with whatever value they want. And a man who was head of the coinage committee in the 1980s suggested that we could actually just pay off the whole debt by coining some very large coins, and that would be perfectly legal. Right now, then after he said that for Congress for some reason decided, oh no, we don't want to give ourselves that power, so they put a cap on all the coins, how much you could issue and what the value would be, except for the platinum coin, which they allowed as a commemorative coin, but they could actually stamp a platinum coin with $1 trillion and put that in their account with the Federal Reserve, and they'd have $1 trillion to write checks against. I mean, you'd still need the Congress to approve the budget. It's not like you're going to just be giving away money willy-nilly. It still have to be something that was voted on, but you just wouldn't have to worry about this artificial debt, which we have an $18 trillion debt, and we have close to that in terms of GDP and the money supply. So the debt actually is the money supply. All of our money is created by debt except coins and, a few dollar bills. So at most, like, I think maybe 3% of the money supply is actual currency, and all of the rest is created by banks when they make loans.
So why don't they stamp out 18 or so manhole cover size coins that would cover the debt? Is it because banks would lose money on this?
Well, that's a good question. We've been so brainwashed for at least a century on the threat of hyperinflation, that if you allow governments to print money, that they will devalue the currency. But in every case where that has happened, the reason they have printed money is because they owed debts in a foreign currency. So they basically made themselves vulnerable to speculators. Take Zimbabwe, for example, they owed money. The IMF had cut them off from loans, and they had to pay back the IMF. And so they had to buy dollars. And the way they bought the dollars was to print their own Zimbabwe currency and buy the dollars. Well, it was obvious what was happening here. So the speculators charged more and more in the way of Zimbabwe dollars, and that eventually hyperinflated the currency. They had to keep printing more and more in order to buy dollars. But if your debt is owed in your own currency, which is exactly what we have in the U.S., where we don't owe money in foreign currencies, we owe money in dollars. So why is the government borrowing those very dollars that it has the power to create? Only because it looks bad. People don't they're so afraid of letting the government print allegedly more money, but they haven't they've printed very little money. What we have done is let the banks create all of our money and lend it to us at interest. But this is coming out more and more, how the money system works. I mean, of course, I don't really expect Obama to follow my advice, or for anybody to follow it, but the reason I keep writing on this subject whenever it comes up is just to show how easily we could fix this. But we have a misconception about what money is, about where it comes from, what would happen if we allowed the government to print it. The government is who should be printing it. And it's happened before. I mean, in the American colonists, that's how they did all the amazing development they did, was that they actually issued the money to pay for things. And the Commonwealth Bank of Australia did it from 1912 to 1923 at least, where they just issued the money to pay for all sorts of development. Canada did it from 1939 to 1974, where it was the Bank of Canada issuing the money, but the Bank of Canada was owned by the government and was obeying the dictates of the government. And it wasn't, so through that, they managed to get effectively interest-free loans because they own the bank, and do all sorts of development across the country. And they stopped, only in 1974 gradually thereafter, because of joining the Basel Committee, which was the Bank for International Settlements in Switzerland. So basically joining the global central banking system, which said that governments should not be borrowing from their own central banks, and that they should be borrowing on the open market, as if this meant borrowing existing money. But in fact, they're borrowing money that's just created on the books of private banks, when they could be borrowing money created on their own books, or not even borrowing it. They could just be issuing it, which is the cleanest way to do it.
How much money did Canada owe before 1974?
Well, I don't remember the exact figures, but I've seen it calculated that had they not had to pay interest on the debt, that Canada would owe nothing right now. In fact, they'd be in the black. They'd have a surplus. Excuse me.
Well, right now, both the Canadian and U.S. governments owe billions and billions of dollars. Could we just erase that debt overnight?
You could pay it off just by issuing the money. Would that be inflationary? No, I'd say it wouldn't, because the bondholders, the people who have that debt, well, at least in the U.S., the bonds are held digitally at Treasury Direct. I mean, you could have printed bonds. I just did this for my mother. She had a bunch of bonds, and so in order to redeem them, you have to send them into Treasury Direct anyway. So they become digitalized. It becomes digital money, and they've done this before, where they actually called in a bond. It was in 2004, and I know it was quite controversial, and that's the reason I wrote about it earlier. Like, I think I wrote about it in 2007, that they called in this bond before the due date just because they didn't like the interest rate. It was too high, so the government said, we're just going to pay off this bond. But then they refinanced it, but they wouldn't have to refinance it. But the way they paid it off was they just entered into these accounts. You used to be holding a bond for X amount of money, and now suddenly you're holding cash. Now, are those people going to rush out and spend the money? No. I mean, that's happened to me, where you see in your account you have one form of savings and suddenly becomes another form of savings. That doesn't make you want to go out and spend it. You don't suddenly have money you didn't have before. You just have your money in a different form. You may go out and invest it in something else, like, buy some corporate bonds or some other kind of bonds, but you're not going to rush out and buy consumer goods with it as if, oh, boy, I'm rich all of a sudden because my bonds just got turned into cash.
If the government did do this, both the Canadian and U.S. governments reverted back to a bank of the people that truly is a bank of the people, what would that do to our taxes?
Well, it would definitely reduce. It could arguably, if the government just issued money directly for all their expenditures, obviously there would be no taxes. You wouldn't need to have taxes. And that's what happened in Pennsylvania for about 50 years during Benjamin Franklin's time, where they did just issue the money directly, and they lent it. They had a land bank, so that the government owned a bank, and they lent it to the farmers, and then it would come back, and then they would lend it again, and would come back, would lend it again, and they printed enough to cover the interest. So you didn't have to continually be expanding the money supply, but during that period they paid no taxes except an excise tax on liquor, which was just sort of a penalty tax, and they had no inflation as a result of money printing anyway. That some prices went up, but it was because of shortages, and they had no government debt. I think maybe I said that twice. But yeah.
Well, I know in Canada we had a movement back in the 1930s, the social credit movement, where that's exactly what they proposed. We'll print our own money to cover our own debts so that the government essentially is debt-free, because it was the dirty 30s. People were finding it hard just to find enough money to eat, let alone have shelter. So that was their solution, and they held power in Alberta until the 1980s, I think.
Right, the Alberta Treasury branches. So they weren't allowed to, I don't think they were allowed to issue actual money. Didn't they issue sort of credits that were through the bank? I mean, you had to be within the banking system. If you tried to pull your money out of the banking system and convert it into the national currency, there was a big penalty for that. So basically you're trading within your own sort of community currency or digital currency system. And I saw Ecuador has just done that recently, where Ecuador is on a dollar standard, so their currency is the paper dollar. So they have to get these boatloads of paper dollars in just to have the money to conduct trade. So the government has now said, well, we're going to issue a digital dollar. It's going to be issued at 1-to-1. They're not allowing any speculation in this digital dollar. In other words, if they just said, that would be the concern if Greece did it issued a digital currency, then the speculators would immediately take it down in value versus other currencies. But in Ecuador, they said, no, it's just 1-to-1. Take it or leave it. You can take these digital dollars that we're going to start spending or not. And the people are taking them, and it's working. So they're accepting this dollar. It's very handy. They can do it by bank cards, trade by bank cards. They don't need to always be dealing in paper money. And they've set up this arrangement where individuals can have an account at the central bank. I mean, imagine having an account at the Federal Reserve. So everybody gets the benefit of this one big sort of national, publicly owned central bank, which is great.
Yeah, wouldn't that be wonderful in Canada, where the central bank rate right now is 0.5%, and in the U.S. it's 0%.
Exactly.
Right, if I could get my mortgage at 0.5% or buy a car at 0.5%. Wouldn't that be great for the economy?
Yeah, well, the reason they get those low rates, and I mean, I've proposed that, why can't we lend to students at that rate? And then the objection is always, well, because students are bad credit risks, and, you're going to have defaults, and somebody's got to cover the defaults, and the banks are good credit risks. But why are the banks good credit risks? Because the government backs them. I mean, they were terrible credit risks in 2008 or so, and the government stepped in, and the Federal Reserve stepped in with $16 trillion of backup money. If they stepped in and backed up the students, they too would be good credit risk.
Well, I guess one of the reasons why politicians are reluctant to change the system back to what worked so well is that their major backers at election time are the banks.
Right. Well, they're definitely working in lockstep. So, yeah, that's why they don't. Supposedly, that's why they've been caught in a dozen or more than a dozen, I guess. The big U.S. big Wall Street banks have been caught in more than a dozen actual frauds, like criminal fraud, but they weren't prosecuted as criminal fraud, but all the elements are the same for criminal fraud and civil fraud. So the reason nobody goes to jail is because they need those big banks to work apparently their black budget and so forth. And so if they sent people to jail, nobody else would step up and replace them. So.
Well, then,
they're in cahoots, in other words.
I was going to say, you don't need to replace the banks if you're doing their job for them.
Right.
What about the case in Canada where someone is suing to have the right to borrow money directly from the Bank of Canada?
Well, there's the Comer lawsuit. Is that the one you're thinking of?
Yes.
Where they're suing to have the government borrow directly from the bank, as they used to do, which would be interest-free loans, instead of issuing bonds where they have to pay interest. And yeah, definitely, they should do it. I mean, that's in the Bank of Canada legislation. I think it's a great lawsuit, and I hope the courts are as open-minded as, I hope that the courts go along with it. But of course, in the U.S., the courts, or the Supreme Court at least, is also sort of captured by the government, I think.
Well,
or by the banks, rather.
Well, a recent interview I did, all these government officials who run central banks, like Mark Carney, he used to be the chair of the Bank of Canada, and now he's the boss of the Bank of England. These are all former Goldman Sachs people. And they said, really, it's Goldman Sachs and their philosophy that's running the financial world.
Well, that's it. A lot of people are predicting that we'll have another collapse, and the next time there'll be no more bailouts. What there will be is bail-ins, which will upset a lot of people. But it's always when you have a crisis that you have change, like the biggest probably change we ever had was in 1933 when we went off the gold standard. I mean, that the banks were closing their doors because there was a run on the banks. Everybody wanted their gold, and obviously there wasn't nearly enough gold to cover all the alleged banknotes, or the banknotes allegedly backed by it. So Roosevelt said, okay, new rules. We're going off the gold standard. We just won't back our dollars with gold anymore. And hopefully the next time we have a big crisis, the same thing will happen where they'll say, new rules. This whole private banking bolster the too big to fail banks is not working. Regulation is not working. They've managed to get around the regulations, and they're still disastrously risky. And so we're going to, it was like what they did in Australia in 1912, where they said the private system isn't working. We're going to step in and have a public bank that's actually going to serve the public.
Ellen, thank you very much for talking with us on This Week in Money. Is there a website people can go to find out more information about some of the things you found and some of the things you believe in?
Yeah, my own website is ellenbrown.com, and I have over 300 articles on there on this subject. And then the Public Banking Institute blog website is publicbankinginstitute.org.
Ellen, thank you very much again.
Thank you. Great talking to you.
My guest has been California's Ellen Brown, founder of the Public Banking Institute and the author of 12 books on the economy. That wraps up our show for this week. Thanks to our guests, Ross Clark, Ted Dixon, and Ellen Brown, and thank you for listening. Comments or questions for the show can be emailed to info@howstreet.com. I'm Jim Goddard. We're back next week with more This Week in Money.
This Week in Money is a production of How Street Media Incorporated.